Good morning, everybody, and thank you for joining in on this Compliance Agenda 2021. Compliance Agenda from Deloitte is a yearly event and has been running for the last 8 years. The focus of the Compliance Agenda is to pick out relevant elements, areas of importance of the compliance area across corporates. And today we have set the focus on sanctions. We have this event which has been divided into two parts, one being a panel discussion of the general trends and landscape within sanctions, and the other part focusing more on technology, RegTech solution, and third-party risk. Once again, welcome to this session. My name is Tony Johansen, and I'm a director here at Deloitte and have been heading the regulatory and compliance department with also the focus on sanctions. I've been within the financial industry for more than 20 years and has transformed various regulations into practical and simple solutions, especially the focus on financial crime area, focus on CTF and sanctions part has also been a part of my journey. Together with me on this slide, I have also added Victor and James, and that's because, of course, we across Deloitte have numerous of good talents and experts, subject matter experts within sanctions, but locally here also we have, together with me in regulatory and compliance, James and Victor, and opposed to me having the financial background, Victor and James have good solid experience and knowledge within the corporate sector, especially within shipping and energy. So, why do we set the sanctions as the point for this session this year? Well, I think we've seen a lot of things happening within the sanctions area, all things that will cater for exposed sanctions risk for corporates domiciled in Denmark or in the Nordic region. This is just a picture of some of the events that are relevant and I think will be discussed in today's sessions. If we look upon the American geographics, we have a new administration in the White House. Does that pose new risk or changes within the sanctions area? We have OFAC now seen for the last 12 months focusing more on 3 specific areas, industries, as opposed to the normal financial service industry. And of course, we also seen a lot of human rights focus and actions, and we've seen a lot of new sanctions, both from the EU towards China. We've also seen sanctions from US towards Hong Kong officials. And of course, we still have a trade tension between the United States and China, also to take into consideration together with the tech Cold War still remaining and being supported by the situation today. And also we see cases, at least one particular case in Denmark also bringing the headlines in the newspaper and thereby posing a lot of questions to corporates of today in Denmark and in the Nordic region, posing how do we actually ensure, protect, control, and make procedures that mitigates those new risks, and how do we navigate in that, and especially how do we ensure that the risk profile that the corporates want are still intact with these new measures. So that's the focus of today's session, or at least the aim for it. And before I go to the esteemed panel and panel participants that we have, I have just a few practical notes that I would like you to know. First of all the slides that you will see here will be sent to each one of you afterwards this presentation. And also this session will be recorded and put on YouTube so you can revisit it or send it to a colleague or whatever you want. And also important is to say that it's possible for you to make notes or comments or questions in the prompt as we go along. And if we are not covered within this session, we'll make sure to reach out to you and give our utmost to answer your questions or give comments back. There's a lot of participants today. I think we are over 250 participants in this meeting today. So there will definitely be something that we will not cover. So please reach out and we will get back afterwards this session. Thanks. Turning our focus into the panelists, we have 4 highly qualified experts sitting as panelists today. I'm very proud to welcome both Amalie Corning-Wetz, who is Head of Sanction and Embargo from Group Compliance in Danske Bank. Also Anu Rom, Head of Compliance for Netherlands and Sweden from Barclays. We have Jeff Nelson, Senior Legal Counsel, Foreign Trade Controls of Maersk. And we have, last but not least, Andreas Rune Nielsen, who is Global Trade Compliance Officer from Haldor Topsøe. So very much welcome to all of you guys. Good to see you on here. And the technical setup also plays good to see. And before we go into the panel discussion, we've asked each participant, each panelist to give a short update, short introduction, each setting a little focus on what they see has been game changers within the last year, and also setting the focus on what to be aware of and be careful of going forward. And after that presentation from each, we will have a more broad panel discussion. So, starting with you, Amalie, and hopefully you can hear me. Warm welcome to you. And please take it from here. Thanks.
Thank you very much for that, and thanks, Tony. I really appreciate the opportunity to speak to all of you today. But it is also a little bit daunting, of course, to be the first one to go, especially among such a distinguished panel. But let me try to set all of us up for success, and then subsequent speakers can follow up on some of the points that I will be raising. And what I thought we should do is to focus on what are some of the things from the past few years that I think will keep plaguing us, certainly within 2021, but also more widely in the years to come. And then also do a little bit of a crystal balling exercise, looking what do we think are going to be some of the key trends that will affect certainly banks' approach to sanctions compliance and their programs. And then I will be handing over to Anu to take it from there. But if we look at really sort of the duration of the Trump administration, 2016 to 2021, we have had a situation of significant EU and US divergence in terms of how sanctions programs have come together and how they've been operationalized and implemented. This has resulted in an incredibly difficult operating environment. I think we've all felt that, especially with the issues such as the Iranian nuclear deal, Iran more generally, but also issues such as Nord Stream 2 and the tightenings of the Cuba program that we've seen within those years. I think another aspect in terms of what's happened in the past that will keep affecting us, and that's sometimes a little bit overlooked, is the fact that the Trump administration went to sort of great lengths to try to lock in some of its sanctions policies before leaving office. The last 2 weeks before the transition were very, very busy for sanctions practitioners. I think you've all felt that. And it is not altogether clear that the Biden administration will be fully able to or even willing to undo a lot of the actions that were taken towards the back of the administration's lifetime. We see that with the imposition of the sanctions restrictions affecting Chinese military companies and the securities that they issue. We saw a lot of designations made under the Iran program and also other programs sort of in the last days of the administration. We saw Cuba added to the state sponsors of terrorism list. And all of these items are, of course, restrictions that can be undone by executive action largely, but there is a momentum to either a new program or to a new designation or an action that's been taken. So I think that some of those actions taken will keep affecting us for some time to come. If we then look sort of more ahead and think what is the Biden administration actually going to be doing differently, what are some of the trends that we should really be looking to, I think that there is this general idea around a hope of a return to normalcy, and also some positive indications that that's actually what is going on. Quite recently, we saw the Biden administration retract Executive Order 13928, the executive order that imposed sanctions with regards to the International Criminal Court. I think that program was sort of widely regarded by many people as an embarrassment. So something that has been generally welcomed by the industry based on my observations. And I think in terms of the Biden administration's focus, we might also expect a change in the enforcement. I think that we will see a lot more focus on Russia, potentially also Venezuela, depending on the circumstances and the developments, sort of in response to the foreign policy priorities of the new administration. I would also not be altogether surprised if 2021 is the year where we do start seeing more enforcement towards the maritime and the shipping sector, potentially. And then I think the last thing that I'll just mention here before handing over to Arnaud will be around the humanitarian sanctions, specifically how aggressively the EU and the UK will be using sort of both their existing designation authorities, of which there are many, but also potential new authorities. There are still some questions around how aggressively OFSI will use its, in theory, extraterritorial enforcement of UK sanctions or enforcement authority there. So those are some of the things that we are monitoring quite closely and are also preparing to take action on when and if they occur.
Amalia, very precise and sharp. Thanks. Okay, uh, shifting to you, Arnaud, you with us. Also, a warm welcome to you, of course.
Thank you, Tony. Thank you for having me. I'm Arnoud Romer. I'm the head of compliance for both the Netherlands and Sweden. Sweden is the hub from which we serve the Nordic region as a whole. I've have a long experience with another large financial institution, ING. And if we start talking about sanctions and the issues around it, and looking back, certainly banks in general needed to get used to a bit more around export controls. We used to, at least in my experience, used to deal a lot of with financial sanctions, but if you look at export controls in 2019, certain Chinese companies being sanctioned, and all of a sudden we were checking our own services and materials that we provide to clients, whether or not the technology in there was not US made or under a certain percentage. I can remember, for instance, that we had to look at certain tokens that we provide to clients to allow them to identify to do a payment, and going into the nitty-gritty details, the technology in that little token not going over a certain threshold. So that was a completely new experience to me. I guess the other distinguished speakers here on this panel have much more experience with export and trade controls in that sense. But what I learned there is that it's highly complicated, and mistakes are easily made. So that's um, well, that was a totally new thing for me to encounter. And if you now take a look forward and see the new Biden administration coming in, of course, the Biden policy is still nascent, and we have to see how it will develop. But the setting of the tone is a little bit more, well, can I say different, and maybe also what I think there will be the U.S. foreign policy mostly will be an emphasis on allies acting as a counterweight to China on various key issues, for instance, like trade and human rights and etc. Um, uh, my expectation is that China will still continue to try and narrow the U.S. economic and technological advantage over the next 5 years, and they certainly won't go away and give up. So I think that's something Biden has to deal with, and the allies. So that will have a its effect on business as a whole, on trade, and especially, of course. And that's another interesting thing I learned the other couple of weeks ago. The New York Times published a little movie on YouTube in which they tracked a ship, and that ship was in the business of evading sanctions on North Korea. And just give a little flavor of how difficult it is, for instance, for a bank to establish whether or not a certain payment is allowed under a certain sanctions regime. Um, the New York Times tracked this ship for a couple of months and then was able to establish that that ship, in fact, was moving out of the port in North Korea, switched off its radar, and surfaced again a couple of days later in front of another port, and seemingly everything was in order. And in between, it had moved oil, transshipped some oil in the middle of the sea towards North Korea. And the expectation on, for instance, the financial sector and banks in particular is that banks can see and hear everything, because payments are such an intrusive data point that you might be able to establish everything from it. But that's usually not the case. And if you look at this movie, you will also see that the companies associated with this ship are shrouded in mystery, and layers upon layers of different kind of shell companies. And that brings me to the point of what's the expectation on the financial sector in adhering to these sanctions and playing our part, and also do we have the right tools to do that. And it's my humble opinion is that, well, currently the RegTech solutions out there are not fit for purpose, and we need to much more invest in, for instance, connecting human intelligence and known topologies together with available open source data and other proprietary data systems to come up with a set of tools that will allow our employees to scan and assess the risk of sanctions evasion. And another point is that there have been very high profile media investigations into sanction evasion, but the impression there, as I mentioned with the New York Times investigation, is New York Times investigates for 4 months into one ship going over the world, doing one transaction, and well, that's one of thousands transactions that we finance every day. So that although it's very good work, of course, and kudos to the journalists that found it out, but it's not something that you can expect from banks, at least to play there a very decisive role, and we can certainly chip in, but it's not the only thing that we have to do on a daily basis. So yeah, on that point, I would like to pass on the buck, so to speak, to my next esteemed colleague, Jeff, who is, of course, first-hand experience with trade and export controls. Thanks.
Thank you very much, Arno. And interesting examples that you're bringing up here. I hope we can get back to those a little in the discussion. And of course, also on the RegTech part, we will definitely get back on that on the discussion. Thanks. And also welcome to you, Jeff. Hopefully you can hear me as well.
Yes, I can.
Warm welcome, and please take it away.
Thanks much.
Yep, slide.
Shifting gears now to the transport industry, and then kind of following on the comments of my previous two colleagues, I think I'd like to focus more on the trends both before and after the Trump administration. In that context, at a high level, my core observation is that though there is a pre and post Trump world. I think that very clearly, and to make an analogy, though we are shifting cars, maybe we're going from one car maker to another, and maybe we're shifting lanes, and maybe we're working at a different speed, we're still on the same highway, and we're still heading in the same direction. So I think there's a lot of trends that transcend the administrations that are going to continue even post-Biden administration, I might add, whether that be Republican or Democrat. And so in that context, a few observations from the shipping industry perspective. First, sanctions and export controls as two distinct subjects are becoming increasingly coordinated, particularly in the US context, although I think we're seeing a little bit more of that now in the European Union as well. And of course, they are becoming a more prominent tool of foreign policy. And this has been a trend in the US for approximately 20 years now or so. And also applied, as Amelia touched on, in more jurisdictions as well. China, of course, being the coremost among them that we see sanctions and export controls applied in. For our industry, this is, of course, very important. So therefore, it's vital to understand where each is relevant, where the hot spots are, the touch points are to our activities, and what the specific implications are, in particular, in the context of increased regulatory enforcement and focus generally on our industry. With that said, I note also that as I see things happening over the next few years, I think Russia and China are going to be bellwethers for more complex sanctions and export control regulations. You had in the past just SDNs. People are bad guys, they're targeted, they're out. But Russia and China themselves, the sanctions and export control regulations built around those countries signal more complex export control and sanctions regulations. While I don't think that either will be subject to comprehensive sanctions, that's nearly impossible. I do foresee that sanctions regulations and export control regulations applied to both will become increasingly complex in order to particularly facilitate targeted foreign policy objectives to deter, punish, and of course rein in the activities of both. Examples, of course, include the fairly complex Hong Kong regulations in the context of foreign financial institutions, menu-based sanctions, generally speaking, the Russian SSIs, which of course we're, I think, familiar with, the Section 889 US government contracting restrictions that we've been dealing with, military and user export control restrictions that dovetail a bit into sanctions regulations, and of course the Xinjiang human rights sanctions regulations and related export controls. With that said, where regulators will go with regard to transport industry generally is something we're obviously very closely watching. Nothing is done yet, but of course the OFAC advisory and the concurrent OFSI advisory of recent got our attention. We're not regulated as closely as the financial industry is in other contexts. Recent cases, including the advisories, the FedEx export control case that we followed in the United States, and of course enforcement action trends, signal, of course, greater potential regulation of our industry. Following on that, we've noted that deeper due diligence requirements are lying in wait. I think they are in some ways the big pink elephant in the room. What they will look like, we don't know. We did, of course, see a reference to it in the OFAC advisory in the context of KYC. We've also seen the Xinjiang supply chain advisory issued, of course, also by the US government. Where this goes will be very interesting in the coming 2 to 3 years and also post-Biden administration. If they do materialize in any form of regulatory requirement, this, of course, will be highly significant, not only for our industry, but also for the financial industry and other industries to which sanctions and export controls are important. Last, I note that, and I think we'll touch on this a bit later on, sanction and export control screening tools and related automated systems are clearly inadequate to keep up with the needs of our industry in particular. And I would not be surprised if my colleagues on this call in the financial industry agree with me in the context of their industries as well. While there is hope, we have seen on the horizon that we are constantly approached by vendors promising to sell us new and shiny tools that can do everything under the sun, including make the sun rise. It has been so far quite admittedly disappointing to observe the broad lack of understanding of what we need. And with that, I'll turn it over to Andreas.
Okay, thank you, Jeff, and setting a little spotlight on Monica on the last session regarding RegTech solution. Good to have that. Thanks. And welcome to you, Andreas. Warm welcome as well.
Thank you.
Please go ahead.
Yes, thank you. Well, it's a pleasure to be last following such great comments, and I agree with what is being said by the speakers here, and in particular here by Jeff on the whole sanction and export controls issue being converging and more and being used as a foreign policy tool. From our side as Haldor Topsøe and a business working in the chemicals and petrochemical and sector, we work and follow sanctions and export control every day. And one of the challenges for us last year was this myriad of sanctions related business requirements, both from financial institution and from transport business partners and all of the business partners that we interact with on a daily basis, that each and everyone has a different maybe has different interpretation, different policies, and different risk appetites. So it's sometimes a rather complex work to navigate these requirements, and that is something that we are working with to try to make in a way that is efficient for us and taking into account our level of risk appetite, of course. And going forward, unless we see a huge coordination between some of the EU and the US, then this is something that will persist for years to come. So as was mentioned by Arnaud, the banks have thousands of transactions every single day, and maybe millions of transactions, and we maybe have very few transactions, but of a high value for us. So that's why the different interpretations they arise. We do see that there has been some coordination between the US and the EU in the sanctions area so far this year, and that's positive. But like Jeff said, there are some ground that there has been laid some tracks that are difficult to change going forward. So there are probably limits to what can be done and what can be coordinated. But it is positive to see some talks going on now between the US and the EU and Iran in light of the JCPOA, but we are not convinced that something will materialize soon on this, but of course always hopeful. I echo what Jeff said about the export control regulation and also sanctions regulation coming from China, from India, also Russia. This is something we have to navigate. It's not easy. We have to follow it closely, see how it develops. We are in the process of automating our due diligence and are constantly looking at the markets to see what can fit for our size and our purpose. And I agree with what is being said, that the good data quality is difficult to find. I mean, we see a lot of good interfaces, but when it comes to the data quality and the ownership information available and how it can be integrated, we have not seen the perfect solution yet, but with new technology, something is bound to happen on this issue. Definitely, we will see more requirements for due diligence for companies. We have to work together with our business partners to be able to inform each other about the corporations that we work with. So increased awareness of sanctions risk related to third parties. This is hugely important, and in our company we work a lot with trying to do training to enlighten our colleagues about that sanctions and export control risk is a risk that should be addressed with as much importance and as much weight as other great risks of doing business. So that is definitely something that we have to work on in the future. So in the interest of time, I will keep it. I will end it here and look forward to questions and discussion and comments. Thank you.
Thank you very much, Andreas. And let's turn to the more broad discussion after this short introduction. I think I would like to pick up maybe with a question to you, Amelia, and in continuation, you could comment as well, Jeff, with what you actually touch upon, Andreas, the cooperation between business partners. And I think maybe just touch upon, Amelia, how you see the alignment between the financial institutions, being the banks, and of course the corporates trying to navigate with these risks, and especially in terms of the thresholds used, and also in regards of the risk scale used and risk appetite in those two organizations.
Right. Thank you for that question, and I think it's a fantastic one. It's probably no secret that there are those instances where, say, a bank and a corporate do simply not agree on what a specific activity is, whether it's permissible or not, whether it's inside outside of risk appetite, and whether an activity like that can be facilitated through that corporate's general banking products. Fortunately, I actually think that these cases are in the minority. I see that for the vast majority of cases, there is good alignment, but offering sort of the banking perspective of this, we see that a part of having a mature sanctions compliance program is having a defined risk appetite, having defined policies, and then actually also adhering to those. So as a result of that, you will, for example, often see that banks have more restrictive sanctions policies and risk appetites than what is strictly legally applicable. And there's usually very, very good reasons for this. Sometimes it can, for example, be that a bank is aware that it doesn't actually have the right controls in place to manage the risk associated with business in a high-risk jurisdiction involving a high-risk counterparties. And in those cases, we may say no to facilitating specific activities to protect both ourselves, but also ultimately the clients. Another reason for what you might sort of interpret as a divergence there is that sanctions risk tends to look very different for banks than it does for any individual corporate. Banks, we usually have more clients, we have more exposure, we have more transactions. Sometimes it is very, very few things that have to go wrong for us to be sitting with a very significant exposure. And of course, banks have also historically been at the forefront of enforcement efforts, of regulatory efforts, to really make us sort of the spearhead for sanctions compliance and making sure that the requirements are adhered to. With that, I think I'll hand it over to Jeff to hear his view on this particular issue.
Thanks, Amelia. Yeah, I don't disagree with anything you said. I think that we, of course, are keenly aware that the financial industry has been on the front line of being targeted for the purposes of enforcement actions. I think though, and I agree with you, Amelia, with regard to that there is actually where we disagree is more on the margins as opposed to in the center. And in terms of that, there are three things I'd like to focus on. First, I think it's important to note that our industry is very different than the financial services industry. And well, of course, it's very important that all companies in our industry have competent sanctions compliance programs and an internal sanctions council. With that said, though, I think it's important to note that our industry is highly diverse. It's not a single industry. It actually includes segments that are very different from each other, such as towage and vessel services, port operations, logistics, air and land transport, customs house brokerage, warehousing, and then, of course, several different types of ocean transport, ranging from petroleum to bulk to your traditional cargo carriers. And each of these has very nuanced differences in terms of regulatory application of both sanctions and export controls, and therefore different risk appetites among them. I think that one challenge we find is that sometimes banks don't understand that. And second, I think that it's important to note that the risk appetite And the thresholds of our industry is, of course, similar to banks, though, heavily influenced by the diverse functional relationships that we have with our clients, our vendors, and our business counterparts, for example, in the context of joint ventures or other collaborative activities. And then the last thing that I'd like to note in terms of the spearhead of contentions that we have with banks is that our risk appetite is, of course, influenced by the different way in which sanctions and, of course, evasion attempts are play out in our industry. This was touched on a little while ago in the context of the North Korea petroleum shipping issue. While banks run the monies through their accounts, we see this from a different perspective. Of course, we face the same risk, but we see different things than the banks do. And this, of course, potentially is one area where we can align more clearly with the banks because we have some information and they have other information. And the objective of both of us is to avoid being targeted in a regulatory action. So I do think, though, that these three factors create some divergence between our industry and the financial industry. And I don't know that those bridges, those gaps can be bridged, but I do think that there is room for more collaboration and understanding between the two.
All right, thank you. And maybe in continuation with that, turning to you, Andreas, and asking the more obvious question, do you see banks supporting corporates at the level as wanted, or how do you see that level
Yes.
towards the two organizations?
Thank you. Yeah, I completely understand the issues mentioned by Amalie, and I will say that in the past years that I've been working with this area, we have seen that that at our company we have stepped up our communication efforts to ensure that the staff that are involved in the daily communications with our financial institutions, they are better informed, and I have worked on sort of explaining and providing better information about certain business transactions. And that it's my experience that we have seen from the banks also a much better communication going back to us. So instead of just a blank no, they are actually engaging in a dialogue, and that's very positive for me to sort of get a dialogue and an explanation of why this is not possible, or how it may be possible if we work together and identify ways to mitigate the risk involved. So I actually think that it has improved greatly if I compare to 2 or 3 years ago. So overall, I'm positive that the level of knowledge have increased on both sides, and I think that's key here. So that both of us know exactly what we're talking about, and we are probably also developed our own risk appetite and described it, and the framework is more clear for us what we want. So I'm positive that the banks will be better at supporting us as well.
Okay, thanks, Andreas. Maybe a reflection from your side, being also representative of corporate, Jeff.
Following on my earlier comments, I definitely do believe there is room for improvement here. Absolutely. But that said, I mean, there are many success stories that I've been a part of where our business is intended to do certain things in risky areas, I'll call it that. And we've gone specifically to a particular bank and said, look, our business wants to do X, Y, Z. Here are the controls we have in place. We've vetted all of their activities. Here's evidence of our vetting of their activities. Here's what we'd like to do with you going forward in that context. Can you please set up an account for us doing this? And then, of course, we impose certain requirements on the business themselves to make sure that as those activities continue, that they're not falling out of compliance. And we stay in constant contact with the bank. And again, there are tons of success stories on this front. So I think that, again, the disagreement with the banks is much more in the margins than it is at the center of anything. However, that said, I don't believe that, and I want to make clear that we don't expect that the banks support us. I think we can police ourselves. And we're big boys and girls, and we're here to do our job. We understand sanctions, we understand export controls, and we're accountable for our own behavior and the behavior of our colleagues. And it's our job to make sure that they're in line. But that said, though, I think, and this may be a bit controversial to say, one thing that I would like to see is for the banks to make more of a good faith effort to understand what we do. And again, this does happen on particular cases, but generally speaking, to understand what we do and how we do mitigate our risks. But that needs to be in the context of not attempting to police us more and impose more extrajudicial or extra regulatory burdens on us, as those burdens are imposed on us already directly by the regulators. But nonetheless, I do think there's room for dialogue. And I do, again, want to emphasize that there's been plenty of great success stories with banks.
Okay, great, thanks. And maybe shifting the focus a little to what you said, Arnaud, in your introduction in regards of new jurisdictions being hit by sanctions, especially on the China part. I think a lot of corporates are used to navigate and across Russian counterparty risk, but now we see China and other jurisdictions open up with sanctions. What's the approach and what's the advice that Barclays goes forward with to the corporations in corporates trying to open business in these new jurisdictions?
Well, also what Jeff said, they're big boys and girls as well, so they can at least come up with a solid analysis. What do you want to do in this area, and why do you think that you can stay within the margins of the law, so to speak? And I do echo what some kind of frustration and then that the corporates might have. For a bank, you only need one client to pull you under. That's basically the risk we're talking about here. This one client that you didn't had a close eye on, so to speak, and inadvertently did something wrong and you missed it. And that's the fear that still is among these among large institutions as Barclays as well. And that doesn't mean that we shy away from it, but that is something that we need to be acutely aware of. And what you see is that now, for instance, the risks are spreading, so to speak, because there's much more focus now on, for instance, China than there was before. So yeah, that expands the risk a little bit more. So that's something that we that worries us a little bit. To be quite frankly, because also we do not know which way it will develop. So yeah, that unfortunately it's not a very clear answer, I'm afraid, but it is something that really advocates for an open dialogue between clients and their banks. And so I really would echo just what, for instance, Jeff and Andreas said in trying to educate each other where you're coming from and being open and frank about what do you think is still acceptable and what is not. And that's something we have to deal with.
Yeah. Thanks, Arnaud. Any reflections from the other panelists on that matter? If that's not the case, I think we'll jump to the new Biden administration in the White House, and several of you have actually touched upon that in the intro. And maybe to you, Jeff, maybe you can clarify a little more on what your expectation is in terms of new policies and new sanctions going forward with this administration. I know you already touched upon it, but maybe go a little more detail on your expectation on that. That would be very much
Sure.
To hear. Also, you being a U.S. lawyer.
Yeah. I mean, sticking with my analogy of changing cars and maybe lanes, but staying on the same highway. I think that first, and this has been touched on already, the Biden administration has clearly signaled that sanctions and export controls are going to return back to the pre-Trump approach, both Republican and Democrat, to be more influenced by multilateralism. However, I mean, this is of course been evidenced by the recent Myanmar and China's Xinjiang sanctions. However, I note that the U.S. has shown, even during the Biden administration, although it's only been around for a few months, that it will go it alone, both in the context of issuing more broader and far-reaching sanctions when aligned with allies. Of course, The MEHL and MEC Myanmar sanctions are examples of that. The European Union has not sanctioned those parties yet, but the U.S. has. That's significant. The U.S. also yesterday sanctioned another large Myanmar military-controlled company that the European Union has not sanctioned yet. I don't think the European Union will sanction them, but I don't know. The Belarus sanctions, the U.S. sanctions against recent activities in Belarus were much more far-reaching than the European Union's were or other allies. Of course, the Russia Magnitsky Navalny sanctions, or the European Union calls them human rights sanctions, the U.S. calls them Magnitsky. The U.S. sanctions in that context were also much more far-reaching. And of course, the China Xinjiang sanctions designations, also more far-reaching. I think that the U.S. will also continue to go it alone on sanctions applicable to China, particularly in the context of Hong Kong and Taiwan, if that comes to be, the context of the South China Sea, where the Europeans really have not done much yet, but that U.S. has taken action, particularly in the context of export controls, which are a sister now to sanctions. And of course, Iran. I do still think the U.S. will continue to go alone, no matter what these negotiations in Vienna come to result in the next couple of weeks or months. I still do think that the U.S. will have more stringent sanctions vis-a-vis Iran than the Europeans do. So my first observation is that. Secondly, I think that, as I've touched on, the administration has also clearly signaled they're going to continue the Trump administration's initiative to make sanctions and export controls work more hand in hand, which means that for our industry, it's very important to be experts in both at the same time. And I do think that they've also signaled very clearly that they're going to continue to aggressively enforce both. There have been several enforcement actions over the last couple of months, and I was particularly interested to see some enforcement actions published in the context of export controls, in the context of fairly high-profile export control regulations. I think that the initial statements from Treasury a couple of days ago, the Treasury Department is currently undergoing a review of their sanctions program. This happens at the beginning of every administration. And they issued a statement, and that statement made very clear that sanctions will remain a high priority tool, often used in the context of U.S. foreign policy. So we don't expect a complete unwinding of sanctions and a lessening of the workload for those of us on this panel. I think we're all going to be very busy people for a very long time. I think that I surmise that some had hoped that this wouldn't be the case, but I don't think it's going to be. And of course, in terms of Danish business, this is very important because whenever Danish business engages in transactions in US dollars, you're triggering the relevance of US sanctions because you may be causing a bank to break the law. So it's going to remain, of course, very important for Danish businesses to keep a very close eye on. Obviously, of course, how secondary sanctions will play out is still something unknown. I note that the European Union is aligning more with the US on sanctions, and they're cooperating more behind the scenes on sanctions. So that's a good thing. But the European Union has also recently signaled in a strategy paper that it intends to try to push back against the US on secondary sanctions. So how that will play out in terms of greater cooperation, but pushing back on secondary sanctions behind the scenes is going to be a very interesting story for this year, and I think well into next year as well. And then the last thing I'd like to note is that, and I think those in the panel would agree with me on this, that the US is not shy in terms of enforcing sanctions against Danish companies. I'm very aware that the US is in the background on the Dan Bunker case and has pushed the Danish government to enforce this case as they're doing right now. So I don't think we can expect that the US government is afraid to enforce sanctions violations against Danish companies simply because the Danish government is an ally of the US. They will enforce against Danish companies.
Great. Thanks, Jeff, for a very precise answer on a big subject. I saw several of the other panelists nodding as you went along, especially you, Amelia. Do you have something to align on or comment on?
Well, I think that I agree with everything Jeff said first and foremost. And one of the issues that we also monitoring very closely in this area is how extraterritoriality in a more general sense is going to play out. We now have OFSI coming out with its enforcement guidance quite recently, quoting sort of what that regulator is going to view as the presence of a UK nexus. We still need to see it play out what that actually means. So I think irrespective of whether you're sitting in a financial institution or in a corporate with a global footprint, you need to brace yourself for a very complex operating environment where you both need to deal with various what you can call primary sanctions applications in terms of your home regulators, the areas where you do business, but also find ways to navigate what will then be an overlapping risk landscape as more and more regulators, while they do try to align, are also, to Jeff's point, very willing to go alone. Again, I want to highlight Nord Stream 2 as a good example of that, where we have seen very aggressive positioning from the U.S. Without any sort of real coordination with allies that's brought anything to bear, at least at this point. I noticed that the U.S. will be looking to appoint a special envoy for the Nord Stream 2 project, so that's something we are following quite closely and monitoring with interest.
Thank you very much. And maybe just touch upon, at least from my perspective, working with AML for many years, I think one of the game changers was definitely the Danske Bank case, putting and changing the agenda in many boardrooms in terms of money laundering, and also creating a whole new best practice set up across the industry. And maybe you, Andreas, do you have a point on how a case like that could change the best practice across corporates, the industry, and how that will affect?
Yeah, it will be very difficult to predict the outcome and the consequences of that case. As Jeff said, that the US is of course looming in the background there. But to me, it simply signals that and it's surprising, but we still have to say it, that sanctions and export control issues are very, very real and important risk for corporates to take note of, and it has to be part of our risk framework, and it has to be something that is dealt with professionally with the policies and procedures and all the tools that are available to us, as we would do with any other business risk that is very significant. So to me, it also says, of course, that there are some political issues coupled with sanctions, and that's what makes it sometimes a bit of a gray area and difficult to predict, and that's why you have to have a well adapted risk appetite to navigate it. And I think we will from time to time see these types of cases where there will be court cases or arguments. What actually happened, we as a public will probably not know that much about, but I think it will definitely have an impact in Denmark and putting it even more on the landscape of sanctions and export control. And also, like Jeff said, you simply because you are an allied country, a corporation, you cannot, you're not free to do whatever you want, and you have to really look into who your customers are and what kind of business models are you engaging in. So I think this is definitely something that will make us more aware, all of us.
Thanks, Andreas. Good answer. And maybe for you, Amalie, just a short question on, I know that you've been working very much with awareness around the sanctions area, and also taking from the discussion we have on best practice and tone at the top. Do you have any reflections or giveaways to the audience in terms of how to ensure communication between relationship managers, the business part of an organization, towards the risk and compliance part?
Right. So I think it's important to realize that the concept of having senior management buy-in, senior management support and awareness of sanctions risk, but also whatever sanctions compliance program efforts an organization has in place, that is actually something that is expected. The EU and US has been very clear on this, especially in the past few years with the publication of various guidance pieces emphasizing that point. So there really is no way around it, in that your executive leadership, whatever it might look like, your board, they do need to be cognizant of the sanctions risk that your business operations face and expose you to, and also support the efforts to manage that risk. Otherwise, your program is just not going to work. Now, another spin on this is that OFAC over the years has issued multiple enforcement actions where the underlying root cause, or one of the underlying root causes, was that there was somebody who just did not get it. Somebody in a branch somewhere, somebody in a subsidiary who didn't get the memo, thought that they could get away with changing documentation, changing references to comprehensively embargoed jurisdictions, etc. And that's where the real danger lies for a lot of organizations. It is if you don't manage to set the tone from the top and percolate that throughout the organization to take this issue seriously and ensure that there are escalation routes. If a business person, if a frontline salesperson comes across an issue where they need some guidance in terms of how to navigate that. I wanna quote a friend of mine whom I know is in the audience, Tyler Nilsson, a former Treasury official, who once said that if you're going to pay for compliance one way or another, and either you're going to pay upfront by investing in the right controls, or you're going to pay when you have a violation on your hand. And sometimes it is conceivably cheaper to make the investment upfront rather than deal with it sort of post fact. If we look at the Danske Bank case, I don't think it's going to be a surprise to anybody in this audience that we are on a financial crime remediation journey, a multi-year journey, I might add, and one that also includes sanctions. So we are taking this area very, very seriously and are continually working to improving our controls and our approach.
Thank you very much, Amelia, for that good point. Time is running, and I think we need to wrap up on our final question in this first session before we shift to the other part. And I think we will let the last question be directed to you, Anno, and with the focus on new technology, a new RegTech solution. How do you see technology embrace the need for navigating in the sanctions area going forward? Could you say a few points on that?
Yeah, that's a very good question. Thanks. As I just mentioned, the business is so fast-paced. You have to automate stuff, otherwise you'll drown. So, for instance, if I may point out the Danske Bank case, and that could have happened at any bank, by the way. As a matter of fact, it happened at a lot of other banks. Somebody didn't get it, and the tone from the top was wrong. If you want to get out of this hole, you need to invest indeed in technology, but also in simple human intelligence. You need to have experienced people who have been there before, that know how these typologies work. I've had multiple discussions with clients that did business with other clients, and then all of a sudden a third party paid for it. Why was that? These clients of ours didn't have any clue, and then we sit down together and we pointed out what happened, and then all of a sudden it clicked with them and said, yeah, that is really strange actually. Yeah, we were actually very glad we eventually got paid. So yeah, why are you asking us these questions? And when you then show what we saw over these accounts, but that was after I guess we did 8 months of investigations in the typology that occurred with, for instance, Danske Bank, and we presented those results to the Dutch central bank, for instance, and everybody then was amazed at how much this was going on actually, and also our clients themselves were quite surprised that behind their legitimate client seemed all of a sudden such a dodgy counterpart. And that's it's these aha moments that you need to have with clients to build on forward. And what does not help is that you immediately are in an enforcement environment that everybody starts running for cover and lawyers up, so to speak. but that's something you need to be aware of, you need to engage with one another to get out of it, so to speak. But yeah, what you see in this area, for instance, the data that we as a bank possess is not enough to get around this. For instance, if you so-called third-party payment, what you need to have, for instance, is a data feed with all the relevant chambers of commerce across the world. You need to have a view on which kind of legal structures are commonly used in these kind of transactions. For instance, in the Danske Bank case, the UK Chamber of Commerce played a predominant role. But the only reason why it came out is because the UK Chamber of Commerce is free to access and free to go over. Other jurisdictions don't have that. For instance, the Netherlands, for instance, you have to pay per entry and every check that you made. So as long as this data is not readily available to you, you can't do any investigation, and the expectation keeps at so high that we can't fill up on that. And so well, I start ranting on this, I guess, but the thing is, you can do much more if you try to combine certain data points. So, for instance, shipping lanes. What are the how do the crooks do it actually? What kind of markers are there? And if we'd like to be enlightened about this, of course, and then. There's also a great role there for law enforcement and the government themselves, because they usually know already what is going on. But yeah, it's unfortunately a one-way street. We have to give the information and answer the questions, and that's basically what happens. Yeah.
Definitely going to be interesting to see how that's going to play out in the future. Thanks on answering that. And I think time is running, and we are end of time. I guess we could probably stay on for a couple more hours discussing these subjects, but conscious of the next part, I would say very much thank you to all four panelists of this discussions. I really enjoyed each one's perspective and answers on the question, so thank you very much. And to the audience, I would say we were going to have 2 minutes break, so grab a coffee or something like that, and then my colleague Monica will take over and start the other part of the session. So stay tuned. Thank you very much.
Hello, everyone. Welcome to our second panel discussion, where we will be focusing on simplifying our sanction compliance through technology. My name is Monica Silkart, and I'm director in Deloitte, Denmark, leading third-party risk management offerings. Therefore, I got this pleasure today and honor to moderate the discussion, where I will be also joined by Jan Persson from Refinitiv and also Amy Daniel from Windward. Today, in Deloitte, we also focus quite a lot on following the market trends with regards to third-party risk management and technology enablement. And we are trying to always see what is there, what is the newest, what is the best, and help our clients to bring these insights to their organizations. In Deloitte, every year we run Extended Enterprise Risk Management Survey, which also shows that our respondents, when we come to talk about compliance questions, they say that the best improvement areas or the areas of improvement that they see are specifically real-time monitoring and tracking, and of course technology. Approximately 68% of respondents evaluated this as being the most important aspects of third-party risk management. Therefore, the discussion today is very important and hopefully will also bring you quite interesting insights into how our leading technology providers see the development in the market. From the practical perspective of today's session, I will have Jan and Amy giving their presentations and some insights of what technology do they have and what can they offer in the market and how it can help you who are working with the sanctions and compliance. And afterwards, we will enter the discussion with both of the participants today. So I think on this note, I will go on and give the word to Jan to introduce yourself and give your presentation.
Thank you very much, Monica. And thank you very much for having me here. It was very also enjoyable to see this last panel. So I'd like to just start out by introducing Refinitiv as the company we are and the changes we've gone through. So Refinitiv is a global company. We have more than 40,000 customers, more than 400,000 end users. And we cover nearly 200 countries globally in all kinds of respect in relation to data. So we have on the financial side, we focus on all kinds of elements in relation to trade, etc. But we also have on the risk side covering different kinds of risk. So we have the elements of financial risk, strategic risk, credit risk, any kind of data that you need in relation to do some sort of analysis, basically in relation to risk. And in relation to today's session, we're focusing mainly on the sanction part. But I have a tendency now to, whenever I speak to clients, to also, as they mentioned previously, to have a very close correlation between AML and the sanction part. And it's because it's becoming more and more intertwined. So my focus has been with Refinitiv to focus on the major clients in EMEA, where I'm helping them in relations to both the sanction part as well as the AML part. The reason here is that financial institutions are, of course, highly regulated by the AML and is sort of also pushing that out to corporates. So corporates are now feeling that pressure as part of their internal processes, alongside with everybody having to apply to the sanction that is now governed by them in relation to the different jurisdictions that they're working in. So there's kind of a lot of complexity into this space. And what we're seeing from our point of view is that it all starts with the data. It all starts with the quality data that we can provide to the clients in order to make sure they can make their decisions. If we don't deliver on that aspect, then it turns out that it's not going to work very well either for us or our clients. And that is the most key element of our business. From my side, I've been with Refinitiv for 5 years. I've been in risk for more than 15 years, all kinds of risk, strategic risk, compliance risk, operational risk, as well as financial risk, but have spent the last 8 years in compliance risk. I've been working closely with Refinitiv's team, Global Coalition, in relation to fighting financial crime, where I'm part of the delegation there, where we're sitting with Europol, Interpol, and other World Economic Forums in sort of trying to come up with golden standards in relation to specifically fighting organized crime and terror financing and making it more effectively. I'm also part of the expert roster in the Ekman Group, which is also on the ML side. The reason why it's so correlated is you're seeing a lot of terrorists now being put on sanctions as well. So it's kind of getting into that terror financing segment as well. So you're kind of getting these overlaps. And it's always, to some extent, when I talk to clients, the same journey. So they are on the ML journey as well as they're on the journey with the sanction team. So you always have this correlation between the two teams. Yes, can you move on to the next slide, please? Thanks. Yes, so what we're seeing is a steady increase in sanction regime, also mentioned by the previous elements. We've been looking into the stats going forward into 2020. And what we're seeing is that it's becoming more commonly used with these sanction regimes elements. The US and the EU has always been sort of the ones who have been driving it a little bit. Now everybody is, of course, talking about the Chinese sanctions. But what this chart actually also shows is the element of what's been pushing in 2020, the beginning of 2020 was actually the red line here. It's actually Pakistan coming in with their own sanctions. So what we're starting to see now is everybody's sort of contributing and making it more complex for clients to sort of navigate in that space. First of all, they need to start out basically with country risk assessment, understanding which regions they're doing business in and which sanctions they want to apply to. And then they sort of have to figure out what makes sense to them. If you move on to the next slide. So what we've seen here is by 2017, we had some 21,000 sanctions, explicit sanctions across those countries that we almost have globally. And by 2020, that has grown to about 34,000 explicit sanctions. And that's a 62% increase. And it hasn't stopped yet. So we saw the Joint Comprehensive Plan being pulled back now and enforcing additional sanctions from the US. We're seeing, as the previous panel also mentioned, everything that's going on for the last 12 months almost, and those sanctions are coming into play. And this is just the explicit sanctions we're talking about. You also have the implicit sanctions, where there is the 50% ownership sanctions that is applied to basically every single legislation here on the OFAC side, the EU side, that makes it all more comprehensive, but also justify our existence from Refinitiv in relation to focusing on the quality of data and why that is so important. Otherwise, the clients we have cannot do that diligence process if they don't have access to that element. The major players we've seen, as mentioned, is US still as the biggest player, and they don't seem, I can only concur again with what they said previously, they do not look as they are scaling down. And we're also seeing EU starting to pick up on major sanctions in relation to specifically human rights. Then you have the UK that needs to find their own footprint somewhere in all this after Brexit. And for the future, that just leads into an increased level of sanctions because of the political tension globally is just increasing. We're seeing also South Korea, Japan, and Australia starting to chip in with sanctions. Canada has also been a big partner now in relation to sort of moving that sanction regime. So it's getting more complex in relation to sanctions and how to navigate in that. Yeah. Thanks. Next slide. So what we try to do from the Refinitiv side is try to compile data. So we do that with more than 500 research people globally, sitting Asia, Europe, and the Americans. Because the easy part for us, and I'm specifying the easy part because that's the explicit sanctions, the ones that are on the list, the ones that OFAC comes out with, the ones that 32,000 exact sanctions. Those are the easy ones to cover, but that still takes a lot of work to just get that in to make it easier for a client to screen all those lists by just clicking one time. The problem here is the 50% ownership rule, where you have to dig in deeper and understand that ring of sanction that might apply through the entire network. Where we are also seeing, of course, the interesting part is not talking much about what we are doing in relation to this data, but what are the ones doing on the other side? What are the people doing who are sanctions? Or what are the people doing in organized crime? what they're doing is they're aware, of course, of the legislation because it's publicly known. They also have access to technology and that kind of element. So they're doing to that what they can to sort of avoid these kind of elements of sanctions. And it's going to be just a continuously race between us and them, to so to speak, when you're talking organized crime. On the political side, the sanction side, it's always going to be a matter of political interest to some extent, and where that, shall we say, political interest is of importance for the different countries who puts them out there. Yes, thanks. That's all for me.
Thank you very much, Jan. So on this note, I will give the word to Emmy.
Hey guys, thanks for having me. First of all, good morning there in the Nordics. I expect the weather on your end to be a bit colder than here in the Middle East. I'm based in Tel Aviv. It's about 25 degrees here. So hopefully we can have a warm panel, at least that. I'm the co-founder and CEO of Windward, naval background, been here for around 10 years. Company is almost 100 people by now, headquartered in Tel Aviv, but with sites in Copenhagen, close to you guys, London, San Francisco, New York, Singapore, and others. And we're specialists in shipping and trading. So our thesis is based on vertical AI, the fact that in order to provide decision support, as my esteemed colleagues before me have I think, shown appreciation of the complexity of this world, the growing complexity of this world. So our thesis is shipping expertise and trade expertise in of itself is not enough. AI is not enough. You need to blend these two to actually help people make decisions. Could you press the next slide, please? Thank you. So we all know that about 90% of global trade involves maritime transportation, and specifically banks, as Amalia from Danske Bank said before, are probably the most exposed to that because they finance that. And when people say banks, they think it's pretty broad. Actually, you have ship finance banks, trade finance banks, and correspondent banking. And the three of them have a bit of a different perspective on what they need and the risks, actually. While in the shipping finance world, it's a bit easier because the numbers are lower. You could have one of our customers has a book in Greece, for instance, for about 1,500 vessels. That's pretty easy for us to screen down on a daily basis for them. But when you take that to trade finance, I think it becomes a bit harder. I want to also circle back to what Jan said about good data. Good data is absolutely a mandatory start. We believe that today, because the world is getting so complex, maybe it's not enough. Can you press next, please? And I think our approach is a holistic approach. The vessels in of themselves are probably not enough. The ownership structure, and I think some colleagues spoke about that before, is hard, but also not enough. And the cargo information is also not enough. You need to put all of these together and actually understand what's the dynamic risk profile. I think Arnaud from Barclays mentioned the New York Times article that was powered by our technology, and you could see the complexity of one trade. Now, I don't think it's realistic to expect any bank, and obviously Danske Bank is one of the leaders and Maersk is one of the leaders, but I also saw that there are many smaller firms attending this. Nobody should be expected to have a full-blown research team breaking down the pieces, the Winston trading operations in the world and finding this kind of detective Sherlock Holmes work. I think it should be actually the opposite way. So you need the best-in-class data and technology to provide you actionable recommendations. Can you press click, please? But then I think the question arises is recommendations for what? If you don't just want data, do everyone have the same risk? Do everyone have the same profile? Do a bunkering company does primarily their business in West Africa has the same risk profile as a Dubai-based trader? And I think obviously there was the debunkering case. I don't want to talk about specifically about the details of the place, but I would say that today technology puts the power back to the user, back to the headquarters, back to the chief compliance officer, where they can say, and Amalia spoke of the importance of management buy-in, that's the level of risk I want. That's the level of opportunity I want. And by doing that, you could actually make sure that compliance becomes from a necessary evil, if you will, to actually competitive advantage. Because if everyone has their own unique view of risk, then everyone also have their unique view of opportunity. And I think that's where it becomes interesting. We're all big fans of AML, financial crime, and risk, but at the end of the day, it's about money, and you need to pay for this the one way or the other. And also, it's about buy-in. And too much compliance gets too much pushback from the traders. So I think our approach means that we're trying to strike the right balance between making sure you have best-in-class compliance, best-in-class investigation tools for AML, financial crime, while at the same time providing also an operational advantage to the traders. We have documented cases not only of cases where customers managed to stay out of tomorrow's news, including the New York Times article, by the way, but also where by using a finer comb, by using technology with less false positives, so more recommendations, they could clear deals other won't and actually make 3 million a deal, 5 million deal, 10 million deal. So to wrap up, shipping plus AI, that's the combination. Data's mandatory, good data is mandatory, but actually because there's too much complexity, too much data, recommendations. No one's risk fits all. You need to get your customized view of risk and therefore your customized view of opportunity. Monica, back to you. I hope that was on point.
That was very much on point. Thank you very much, Amy. Also for the teaser about the sun, because in Copenhagen it's dark and stormy today. So at least we can dream about the better world.
Well, you can see,
right. Thank you both for yeah. Thank you both for very good presentations and very nice fly into today's technology offerings. So you both talk about the next level automation, artificial intelligence. And I think that naturally brings us to the question, so how do you see the future role of the compliance officer? What do you believe it will be? Is there should be some certain skill sets that this compliance officers should have? Or do you believe that artificial intelligence and technology will take over and the human work, so to say, will become a smaller and smaller part of the work with sanctions and risk compliance? Can you share your thoughts? Go ahead.
Okay, so the way I see it from my point of view is also, as they mentioned in the last panel, we're not going to get unemployed anytime soon. I appreciate the way of AI and how that is progressing, but the AI I'm seeing as of today is based on machine learning and to some extent robotics to increase the efficiency of the compliance officer's workload. So I think that the concept here is you still need to have somebody making a active decision in relation to the findings of what is seen through the systems and based on the data. So you still need, you can reduce the amount of false positives with the systems and the data. You can increase the understanding of the enhanced due diligence process to make yourself be better at making a decision. But we still need to focus on educating the compliance officer and spend money there in relation to making sure they understand the sanction regimes that you as a company wants to operate in, and also in relation to specifically in AML because of the magnitude of what we're looking at on both scales. So I think it's more of looking forward and seeing where we can implement it to increase the efficiency, and then to think that it's going to come and relieve us from our work. I see an increased efficiency could lead to some replacements to some extent, because you don't need people pressing buttons, but we need people to make decisions and take action, because lack of action will potentially lead to those violations that you as a company is not taking into account.
Maybe I'll jump into that. So I absolutely agree with Jan. Maybe a few more things to emphasize. Number one, where technology is really good is where it can repeatably automate something that a human does. I think that speaks to the first line of defense. So the first line of defense should just get better recommendations with lower false positives. If you just take an old school data vendor approach, just buy data, you just get too much false positives. So you won't get rid of that, basically. So that's the first thing. You would always have need good people for the second and third lines of defense. But technology can make sure that they need actually less talent. If you talk to, again, the best in class people, they tell you there's a big talent crunch. There's so much, so much regulation, so much compliance, so much stuff. So you need to get people who are experts and trading and shipping and compliance and policies, talent crunch. So technology can really help you kind of zero down on what's absolutely necessary for your people to have versus teach them everything. So you can just bake in with expert systems, whether it's our own or any other expert system for that instance. The specific domain knowledge and teach them how to operate that and implement their own policies. That's a good approach. Finally, I think to some extent, technology elevates the compliance officer. So from the people who are just doing the bits and pieces, they're actually required to define the policy, to go to the C-level suite and say, what's our risk appetite? What do we want? What do we think is good for us? And I think that's a good thing. Does that make sense to you, Monica?
Absolutely. I think it only makes sense that we both need to strike the balance and use the technology as an enabler for all of us to become even better in what we do. I definitely agree with you that I do not see the role disappearing, but more becoming even more professional in doing the work that does need to be done. Great. That sounds really good. I think another question, if we can, you both work with global companies. You have seen Nordics, you have seen other parts of the world, and working with also different scale of companies. Do you have any insights or some good thoughts and advice of what would be the best practice in sanctions management?
I think you want to go first this time, Amin?
No, go ahead, please.
Okay, all right. So I think from some of the international major clients that I've been seeing and speaking to, it depends on the policy. It starts out with the C-level and the request for what they want to do and what they want to take responsibility for. From the policy, you build the system that you need. So it varies depending on what is then needed for the risk appetite of the business. So I've seen different kinds of golden standards. Now, the major golden standard I've seen is comprehensive and really gets the job done from everything from a system that complies the policy and the legislation and gathers that for everyone to sort of see that it fits into the process of screening the different sanctions, and then into actually reducing the amount of false positives, and then eventually coming up basically with a few amount of results. So it's a long system setup I've seen, and it gives the ability of flexibility as well as building that entire process. If you're looking for more, saying we need to scale that down and we need to have something that fits us, I think the system, as Amin said, it's important for us to increase the level of the compliance people, so or help them increase the level, so it makes it easier for them to understand the legislation to some extent. And we do that from our point of view through the, shall we say, standardization of the information. So in Refinitiv, the data we have, it's more important for me to teach compliance officers to understand the data we have than they need to understand legislation globally. Because by understanding what it is we deliver to them, they can rely on us delivering the right result, and based on that, they can make a faster conclusion. So I agree with Amin mentioned before that it's more important to make sure that it becomes easier for them to read the results. So I think the golden standard, from my point of view, it depends on what kind of company you are. If you want one license and just screen sanctions, or you need to have a complete rollout, end-to-end process. That's my point on that.
Thank you.
So just quickly, I just see this as something which can accelerate digitalization. The best people that we work with actually improve their business processes around technology every quarter. So they know what do they need. They tell us that. We work in partnership to build that. And when we deliver that, they understand that it actually changes their business processes and creates more advantage to them. So look at it as a journey, as in the partnership versus, here's a bunch of money, give me a product.
Thank you so much, both of you. Well, being very much time conscious, we have essentially only 30 seconds left for our session. So time to wrap up. It's very interesting discussion, very relevant insights. I think we could discuss it for another hour, but unfortunately time is not our friend today. So I want to thank you very much for giving your opportunity for everybody to know what you're doing and giving some food for thoughts. And I also want to thank all the participants who attended our compliance agenda today. I also hope that you got some inspiration and you will have interest in our offerings and also further talk on sanctions and technology implementation. And if you have some questions that you really wanted to be answered during today's session, we will follow up with the answers by email. And we will, of course, also reach out to our today's panel participants to give their insight. So don't be shy, raise the question, we will get back to you. Besides that, we will have a recording of the session which will be placed on YouTube, and you will also receive today's presentations. So hopefully you will be all fit to revisit the good insights. On that note, thank you very much, and have a good Friday and the coming weekend. Thank you.
Thank you.